Very good morning, all of you, and welcome to the class today. Here today we'll be discussing two important, very quick, important chapters: clubbing of income, which is actually your aggregation of income, and sorry, clubbing of income and set off and carry forward. So this is what we commonly call them as clubbing, but in reality, if you talk about the chapters, name it is assessee's total income, other person's income included in assessee's total income, and second chapter is aggregation, set off, and carry forward of losses. So I hope all your concerns are ready and you have seen the revised class or the full-fledged class of it. Today we'll be having a quick revision in the first half for the clubbing and in the second half for set off and carry forward. So before we proceed, if you have any concerns, you can drop in and then we can start the class today. Settle in, please, and then we will be happy to start the class. As you know, you can put in your chat queries in the chat box and also wait for the live interactive session to go around 9, and then you can ask your queries interactively also. Perfect. So shall we begin now? Great. Good morning, Pooja. So I'll not go much into the background of what is clubbing of income, but clubbing actually is a provision brought into income tax to control tax evasion. People with high income group tend to take the benefit of people of low income group and move on their transaction in such a way that the tax liability get settled off into another person, which is not right. Where actually you are earning that income, but you're taking advantage of maybe the relationship which you have maybe with the other person so that you can divert your income. See, tax planning is absolutely correct when it comes to income tax, but tax evasion is not correct. So your provision of the provision of clubbing is from section 60 to 64. Section 60, 61, 62, 63 caters to all assessees, and section 64 caters to only individual. From exam standpoint of view, this chapter becomes a very go through easy chapter. Why? Because you might get question it in a case study or in a full-fledged question where the provision of this clubbing are getting applicable. So no one again would tell you apply clubbing provisions here. You have to see whether clubbing is getting applicable or not. What are the flags which you have to check for? That I'll let you know in today's class. Now, if you talk about clubbing, it's actually as summarized here. Second. I hope everyone can see the screen. So these two basically are for any SSC. That means if such thing is happening by company, by firms, etc., they have to pay tax on it. And these are applicable only on individual. So this I'll quickly tell you about what is transfer of income without transfer of asset and income arising from revocable transfer. But the main focus is actually the question which I've seen coming as a trend is from the individual's clubbing perspective. So first on the income transfer without transfer of asset. This is very common. So suppose there are two-person A and B. Okay. So B might be related, might not be related, does not matter. So suppose A owns a godown. He is giving that godown on rent, but he says to the tenant that do not give me the income in my account, give the income in B's account. Now, technically, when there is no scrutiny involved, everyone would see, oh, B is earning the income, B would show it in his return of income. But actually, what has A done? He has not given the godown in B's name. What he has done is he has just instructed the person to transfer the income, that is, to give that rent in B's account, which is clearly with an intent to transfer the income in such a manner that it appears to be B, but it is actually not B. So now the clubbing provision gets attracted here as per section 60, and B's income, which is the rent, which is coming in his account, would be clubbed in A's income. This is a very common example. So remember, whenever you are going through any accounts or you're auditing or anything, just see that the person who's receiving the income is actually the person who owns the asset. If not, then clubbing provisions would be applied. Next is income arising from revocable transfer of asset. Revocable transfer of asset means, revocable means, what do you mean by revocable? If you talk about, and English meaning, it I think means recalled, but revocable here you have to see has two parts, which is basically either when I'm making a transfer, I'm giving the right of the asset, the right of income of the asset, correct? If I'm giving a transfer of an asset to you, that means if I've transferred a property to you, now the property rights are in your hand. But when we talk about revocable transfer, that means it can be recalled back, or I will still have some rights on it, either in the form of income or in the form of the asset. So either I have a right on income which that asset generates, or I have right on assets. Whatever way I have, it can be both, it can be one. That is called revocable transfer. That means even on paper, I have done the transfer, but still I enjoy certain benefits out of that out of that asset. That is a revocable transfer. Whenever a situation is of revocable transfer, the income arising from it would also be taxed in the hand of the transferor. In the hands of the transferor, because he's still enjoying the asset benefit, but for what he has done such transfer, just for the clubbing purpose. That's just for evading the tax purpose. So that's why clubbing would be attracted. So revocable transfer, where there is either I enjoy the right on the income or I enjoy the right on the asset. In whichever way, if I'm enjoying it, the clubbing would be attracted, as in the provisions of clubbing would be attracted, and whatever income is getting generated on which I have the right would be taxed in my hands, would be taxed in my hands. So remember one more thing, guys, one more thing, students, whenever we are doing clubbing provisions, if I have to club income, I have to club the losses also. This is unsaid. Secondly, it would be clubbed in the same manner, in the same way as it would be have tags in the hands of the person who is receiving that income. Okay, so these two things you have to remember. So technically, the entire fight in clubbing is the person who is receiving that actual income and the person in whose hand that actual income should be taxed. Any doubt up till now? So please, you can use the chat box here. You can use the query box which you have. Just let me know if there's any doubt. Thank you, Pooja. Now, basically, the next three are something which I have seen questions coming on. Spouse's income, minor's income, and income from son's wife. Okay. So now we'll focus on that, and they are pretty interesting also to deal with. First of all, make this thing clear that if it is not any of these relation which is mentioned here, that is spouse, minor, or son's wife, the provisions of clubbing would not be attracted. The provisions of clubbing would not be attracted. I think this is the better one, which I'm using. See, I'm using all the study material which you have, and I expect everyone to use the study material also. The income tax actually study material is extremely good, and I'm sure it is there with all other subjects also. Please refer the Saransh too. So now if we talk about spouse income, that means when your spouse is earning that income prima facie, but when it would be included in your income. When it would be included in your income, there are three major aspects. Only that type of transaction would be included in your particular income. I'll answer your query later. Okay. So the first one is very important, and a question also comes from it. Remuneration to spouse from a concern in which individual has a substantial interest. First of all, remuneration to spouse. So that means the spouse is earning remuneration. Remuneration can be in the way of salary, commission, etc., whatever way. Okay, from a concern, some XYZ company or XYZ firm in which individual has a substantial interest. That means you have to consider yourself as an assessee. Your spouse is earning a remuneration from a concern where you have a substantial interest. Now, substantial interest means 20% or more in either the profit sharing ratio or you have the equity. So 20% or more you have in that concern. Which concern? Where this concern is paying the remuneration to the spouse in which you have a substantial interest. And by you, I mean you with your relative, that is assessee plus their relative, who is again spouse, mother, father, brother, sister, lineal descendants, and descendants, have 20% or more as a substantial interest, which is either sharing in profits when I talk about firms, and when I talk about company, the voting power. So basically, why we talk about the term substantial interest? Because when you are in a position to control, you can divert an income in a way you want. So if your spouse is getting a remuneration from this concern in which you have a substantial interest, then whatever remuneration she's getting would be clubbed in your hand, or he's getting would be clubbed in your hand. But again, no clubbing provisions would be attracted if the spouse is qualified enough, if the spouse is qualified enough to earn that particular income. Now, what do you mean by spouse is qualified enough to earn that particular income? Let's take an example. I'm 30% partner in a firm. Okay. Now that firm is actually into the business of digital marketing. But now suppose my spouse has been has been providing a salary, or is being provided a salary of say 20,000 per month for the firm is actually into digital marketing, but we are giving him, he's an artist, we're just giving him the salary for creating designs. Now that prima facie appears is correct. Why? Because A, the spouse is a designer, he's an artist, and we are into digital marketing. That means he's in some manner or the other is qualified enough to support and to justify that salary which is being given to him. So here the intent is pretty much sorted. In that case, clubbing is not required. Even if even if you have a substantial interest, even if that concern is giving spouse a salary, but if there's a qualification which is justified, then clubbing is not attracted. Clubbing gets attracted, suppose he would have been done some scientific degree. He must have been an engineer, and still we are paying him amount for any of the services which is not required for the firm, but we are just showing him that we are paying him. Technically, why we are showing him? Because we want to claim deduction as expenses. But in that case, since the idea is to show expenses just to pay taxes, that's why clubbing gets attracted. That's why clubbing provisions get attracted. So whenever a question of a spouse remuneration is there, you have to see whether that person is qualified or skilled enough to get that remuneration. If he is skilled enough to get that remuneration, then he is out from the scope of clubbing provisions. If he's not skilled enough, you would apply clubbing provisions on it. So spouse remuneration is a one green flag which you have to see. Oh, this is a clubbing provision question. Now, suppose a tricky part here. Now, suppose assessee and relative, that is assessee and spouse, both combined holds a substantial interest. Obviously, if the assessee has substantial interest, the spouse also has substantial interest. Now, if both are receiving remuneration, then in whose hand the clubbing provisions would it be attracted? If both are receiving remuneration, Then in whose hand the clubbing provisions would be attracted? So in the hand of the person who has higher income, in hands of the person who has higher income. Both are not qualified and both are receiving remuneration. So in the hand of the person who has higher income before this particular income, before this particular salary. And once it is done, it goes on for years. You cannot change it. Any doubt in the spouse remuneration part? Let me just take a question also from here. Very good, Pooja. I mean, very good. You have been revising all the concepts. Superb. So let's take a question which is in your study material only. Pretty interesting question. Mr. B holds shares carrying 30% voting power in Y Private Limited. Mrs. B is working as an accountant, getting income under the salary computed of 3,44,000 without any qualification in accountancy. So you're basically showing accounting charges paid to Mrs. B, but she's not qualified. So Mr. B also receives 30,000 as interest on security. Mrs. B owns a house property which she has let out. Rent received is 6,000 per month. Computes the gross total income of Mr. B and Mrs. B. So this is pretty much clear. Now, again, question will not say apply the clubbing provision and tell the final answer. The moment you see that the information is related given to the spouse and remuneration, you have to be alerted that this is a question of clubbing. Now, since Mrs. B is not qualified, the 3,44,000 remuneration would be included in Mr. B's total income. So when I'm preparing Mr. B's total income chart, I will simply write income under the head salary of Mrs. B, 3,44,000. Now, computed word it's written, this is in general. If computed is written, you don't have to give any standard deduction or anything. It's a final income considered under that head. If it is not written, then it is always beneficial to write your assumptions clearly that it is computed or it is not computed. Okay, this is how you have to attempt it in the exam. Then income from other sources was given in the question 30,000. So the gross total income comes to 3,74,000. And remember one more thing, students. If an income gets clubbed in the hands of the other person, that is in the hands of the assessee, the other person's income would obviously be nil in that particular sense. That means the same income would not be taxed in two hands. If it is taxed in the assessee's income, obviously it would not be taxed in the recipient hand who or from whose income the income is getting clubbed. Remember that thing. So here income from salary is nil. Why? It is already clubbed. Then there is income from house property. Now, since the rent was given to you, so that is not an computed income. So you have to compute it now, but you have to write here. We'll assume that the gross annual value is the actual rent received in absence of any information. You write 72,000 here. Give standard deduction, and that's it. Your question is done. Clear? Any doubt on spouse's remuneration being clubbed in the hands of assessee? No doubt? Perfect? Perfect. Let me see the other part also. Preeti, any doubt? Next is pretty much interesting. Section 64 may all these individuals clubbing provisions are coming in section 64, subsection 1, specifically. Then section 64, subsection 2 is for the HUF wala and 1A is for the minors. Okay, this is how you can remember. Now we are coming to the second important one, transfer of asset without adequate consideration. Now guys, here one thing you have to remember. Now suppose I'm not talking about clubbing. Mr. A gives shares, just shares to Mrs. A without consideration. Now, technically, this is gift. Technically, this is gift. अब इसमें at the time of gifting, nothing gets attracted here. Nothing gets attracted here because in the hands of the recipient, this gift is not taxable as per section 56(2)(10). Why? Because Mr. A and Mrs. A are relatives, and when you receive any gift from relative, it is not taxed. Agreed. But whenever the relationship here is between of a spouse, you have to automatically be alerted. Okay, gift is not getting taxed because the shares are not getting taxed because there is a specified relative person. But the income would be clubbed because of clubbing provisions. So income would be clubbed because of clubbing provisions. So either you transfer the asset to spouse without consideration or without advocate consideration, the income would be taxed in the hands of transferor. The income would be taxed in the hands of transferor. And again, spouse and bolte people think wife only. No. Spouse relationship means husband can transfer to wife can transfer to husband. You will not say we had a proper gift deed and all. If there is an inadvocate consideration, clubbing would be attracted. Now, here one thing interesting is it is written again and again, other than house property, other than house property. So you will ask him, ma'am, whether if the house property is transferred without advocate consideration, will it not attract clubbing provisions? I'll say yes, it will not attract clubbing provisions because when in house property is transferred without advocate consideration, from the individual to the spouse, it attracts the provision of section 27, which is deemed ownership. So you have a specific provision of transferring of house property without consideration from the SSC to the spouse, where deemed ownership is attracted. So in a manner, it is getting taxed in the hands of SSC only, but not from the provisions of clubbing, but from the provisions of deemed ownership. But from the provisions of deemed ownership, where SSC is still deemed to be the owner. Here, I'm not saying when you're transferring the shares, the Mr. A would be deemed to be the owner. I'm not saying that. I'm saying whatever income these shares generate would be clubbed in the hands of Mr. A because of the clubbing provisions. But when I talk about house property, and this is only for spouse when it is transferred to spouse. When I talk about house property may Mr. A remains the owner, or we can say Mr. A is deemed to be the owner by default. We do not say that the income is clubbed as per section 64, subsection 1, clause 4. We say the income is getting taxed as per section 27 because of deemed ownership. This is only in case of house property and only in case when the asset is transferred from the assessee to the spouse. If it is transferred from the assessee to, say, anyone, then you have to see whether clubbing would be attracted or not. Clubbing, but would only be attracted when the relationships are of spouse or son's wife. Otherwise, clubbing does not get attracted. Okay. So deemed ownership, section 27, when we talk about, again, I'm no way saying that income would not be taxed in the hand of assessee. It's either you take it from here or either you take it from there. It's the same thing. But when I talk about house property, you all will apply section 27, deemed ownership. But when I talk about other than house property and the asset is transferred without advocate consideration, you will all apply section 64, subsection 1, clause 4. What would be clubbed? Obviously, the income would be clubbed. The income would be clubbed. And remember one more thing, the relationship of husband and wife is important when we are clubbing. In the sense, when the transfer happened, then the relationship of husband and wife is important. And when the income is getting generated, then the relationship of husband and wife is important to club the income. Now, suppose Mr. A transferred shares to Mrs. A before they became husband and wife, then in that case, clubbing would not be attracted. When the shares are transferred, when any asset is transferred, at that time the relationship should subsist. And when the income is generated, at that time the relationship should subsist. And remember, if any asset is given in connection of living apart, that is in case of alimony, then no clubbing provisions are attracted. Not neither section 27 is attracted, neither section 64 is attracted. Last part, and this is actually everywhere, whenever the income is coming from accretion of the transferred asset. Accretion of the transferred asset means, now suppose Mr. A gave 50,000 as, or says 1 lakh as FD gift to Mrs. A. Okay. Now, from this FD, obviously, whatever interest is getting generated would be clubbed in the hands of Mr. A. Why? Because this FD was given free of cost, basically without consideration, and love and affection is not a consideration. Okay. So, whatever, suppose this FD generated interest of 10,000 during the year, so this 10,000 would be clubbed in the hands of Mr. A. Now, suppose Mrs. A from this 10,000 again invested in, suppose, shares, the 10,000 amount only, she invested in the shares. Now, whatever these shares are giving as dividend would not be clubbed in the hands of Mr. A. Only the income from the transferred asset gets clubbed. Only the income from the transferred assets get clubbed, not if you are investing that income further and generating something, that would not be clubbed. That cannot be clubbed, and that is not clubbed. Okay, so this 10,000, which I've now, which Mrs. A has now purchased the shares of, the dividend from it would not be clubbed. You cannot say this is 10,000 is basically an income which is getting clubbed, and from that you've generated asset. No, only जो asset transfer हुआ without consideration, which was the FD part, only uska income would be clubbed. Otherwise, it would not be clubbed. And this accretion wala part hangs true in your other provisions also, which is for son's wife. Okay, so transfer of asset without consideration other than house property, because house property would attract section 27, but any other asset which is transferred without consideration or without adequate consideration will attract clubbing provisions, and the income from that would be clubbed in the hands of the transferor. Any doubt? If in most of the case में this question of business comes, I'll take up that also. Sangeeta, all clear? Preeti, all clear? So this particular chapter is very easy peasy chapter, which you can revise actually honestly in 20 or less than 30 minutes. So this question is, Mr. Weber started a proprietary business on 1st April 2022 with a capital of 5 lakh. He incurred a loss of 2 lakh during the year 22-23. To overcome his financial position, his wife Vishali, a software engineer, gave a gift of 5 lakh, which was immediately invested in the business of Mr. Weber. He earned a profit of 4 lakh during the year 23-24. Compute the amount to be clubbed in the hands of Mrs. Vishali for the assessment year 24-25. If Ms. Vishali gave the said amount as loan, what would be the clubbing provisions? So first of all, whenever the question comes for business transfer, as in an amount is given for the business or for the proprietary in business, in that case, you have to remember that clubbing would be attracted when that contribution is, or when that gift is part of the opening capital, is part of the opening capital of that particular year. Now, in this case, first of all, we have 2 years, financial year 22-23 and financial year 23-24. When financial year 22-23, 5 lakh was there at the opening, 2 lakh was the loss. So the closing capital comes to 3 lakh. Now the opening capital is 3 lakh, but on the same date itself, that is on 1st of April itself, 5 lakh extra was given. That means 3 plus 5 opening capital comes to 8 lakh. Now out of this 8 lakh, 5 lakh is given by Vishali and 3 lakh is of Vaibhav himself. Now, the profit earned during the year was 4 lakh. So now if someone's have to say that the profit earned during the year was 4 lakh, how would you club it? You will club it as per the unitary method, that is proportionate basis. 4 lakh was generated out of the capital contribution of 8 lakh, out of which 5 lakh was Vaishali, 3 lakh was of Weber. So 4 lakh into 5 by 8 to be clubbed in Vaishali's hand, and 4 lakh into 3 by 8 is actually now the profit actually taxable in the hands of Weber. Got it? If it would have been given as loan, then clubbing provisions would not be attracted, because loan is something which has to be repaid back. It's not a transfer, it is something which has to be repaid back. But again, it should be a bona fide loan and there should be an intention to give it back. So last part of the clubbing when spouse is concerned, we did one is the remuneration part, another is the transfer of asset without consideration to spouse. Transfer of asset without consideration to spouse or without adequate consideration to spouse, and whatever income is getting generated would be taxed in the hands of transferor. Third part is transferring the asset not to spouse but for the benefit of spouse. But for the benefit of spouse, directly or indirectly. So if the transferor transfers the asset to any person or AOP without advocate consideration, and ultimately the income which is generated from it, ultimately the income which is generated for it would be used for the benefit of the transferor spouse. In that case, the income would be clubbed in the hand of transfer itself. Why would a person do so? Because if I suppose Mr. A knows that if he transfers anything to his spouse, which is Mrs. A, even if it is not from the clubbing perspective, even if it is not from the perspective of diversion of tax, but they know if Mr. A gives any gift to Mrs. A, the income which is generated from that gift would be clubbed in the hands of Mr. A. So what he does, he transferred that particular asset to suppose an AOP without consideration and instructs the AOP that whatever this asset is generating as an income would be given back to Mrs. A or would be used for Mrs. A. Now, this is an indirect transfer or this is a benefit which is indirectly given to the spouse by transferring the asset to another third party. So, in this case also, the income which is being generated from that asset in the hands of AOP would be clubbed in the hands of Mr. A. Would be clubbed in the hands of Mr. A. Majorly, question comes here of spouse, of remuneration wala part or of the asset wala part. Any doubt in the provision of section 64(1) clause 4 and section 64(1) clause 3 or section 64(1) clause 7? Because if spouse wala part is clear, son's wife is very easy. I'm doing it in a quick manner. If you think the speed is also fast, you can just instruct me because I'm assuming everyone saw the full LBC Wala classes. If in case you want any deep discussion on any particular topic, please feel free to connect. So Neil, I did not understand your question. Both are need to getting remuneration. Please elaborate एक बार. So Sangeeta, this is for you. Basically, here you know that if you will transfer an asset to your spouse, clubbing would be attracted. But you want to give the benefit of that asset to the spouse, right? How would you give the benefit? Now, suppose you really want to give the benefit of a jewelry or any bonds to your spouse. Okay, but now if you'll transfer, make a direct transfer to spouse, without any advocate consideration, you will know the provisions of section 64, subsection 1, clause 3 would be retracted. Oh, sorry, clause 4 would be retracted. So what should I do? So what you did, you smartly planned that transfer to another person without consideration, and you instructed that another person that the income which is being generated from this particular asset either would be given to my wife or would be used for my wife's benefit or would be used for the spouse benefit. Now, this is an indirect transfer for the benefit of spouse. This is a transfer for the benefit of spouse. So, whenever a transfer is done to another third party, in this case, the AOP, directly, indirectly, but ultimately the income from that particular asset would be used for the benefit of spouse, then also the clubbing provisions would be attracted. Then also the clubbing provisions would be attracted. Now we move ahead to understand the clubbing provisions when son's wife is in question. So, ma'am, clubbing provisions would not be applicable when we are having income from major son, major daughter, or if we are giving any gift to son and daughter. Yes, no. Clubbing provisions get attracted only when there is spouse involved, or there is son's wife involved, or minor children are involved, or in case of individual HF also. So only in those cases, clubbing provisions are attracted. So if you give anything without consideration to your son who is major, or without consideration to your daughter, or without consideration to anyone as a matter of fact, clubbing would not be attracted. Clubbing would not be attracted. So now the same provisions which were there for spouse applies almost in a similar manner to the son's wife. But 2 points here are the remuneration part is not here. There are parts only. The same under section 64(1)(6), which is asset transferred to son wife without consideration or for inadequate consideration, and second is asset transfer to any person for the benefit of son's wife. Or kuch nahi hai. For the benefit of son's wife, it is exactly same, which is like in the case of the spouse. जैसे spouse की benefit के लिए you're transferring any asset to third person. Similarly, here for son's wife benefit, if you're transferring any asset to third person. But remember, when I talk about transfer of asset without consideration by father-in-law or mother-in-law to son's wife, here you have to include the house property also. When I talk about to spouse, house property was excluded. Why? Because house property transferred without consideration to spouse has a special provision under section 27. But house property transfer without any consideration to son's wife does not have a special provision under section 27. So here, house property also, if it is transferred, would get attracted as clubbing provision under section 64, subsection 1, clause 6. So if any asset basically is transferred by father-in-law or mother-in-law to son's wife without consideration or without adequate consideration, will attract clubbing provisions in the hands of son's wife. In the hands of the transferor, who is father-in-law or mother-in-law. Remember again, whosoever is transferring, unke haath mein it would be taxable. So if father-in-law has transferred, father-in-law ke hands mein. If mother-in-law has the transferor, mother-in-law ke hand mein. If both are the transferor, co-owners, दोनों के hand में equal. So just give a quick read एक बार to the provisions and solve illustration 6.
Ridhima ji, can I take a minute?
Yes, sir.
See, if the spouse or minor children, if they are earning on their own as an artist, or if they are professional, then whether clubbing provision will apply?
No, sir, no.
So that this we should tell to the children. Na?
Sir, minor children is yet to come, but for the spouse, we've already covered that.
No, but if they are earning on their own, so the clubbing will not apply.
Correct, sir. Minor
so
part.
Have we covered this?
No, minor part we yet to come on.
नहीं, spouse में हमने cover किया है क्या
Spouse
ये?
में हमने cover करा और उसमें ये बताया if they're earning without any qualification from a concern, then clubbing provisions would be applicable.
No, but still, if some is a hobby, yoga classes, or a vocation, vastu, astrology, then also it will not apply.
Definitely, sir.
Clubbing will
Yes.
not apply.
Yes. Yes, sir.
So if we can make students very clear, no,
Definitely,
then
sir. Definitely.
and that proviso, if we can read out, my suggestion is the students should read from the Bare Act.
Definitely, sir.
So that habit we must inculcate in the student. And I had been telling Aparna madam that please get the Bare Act, SCC online. There are many law online portals who give the updated Bare Act.
Correct.
Good morning, sir. Sir, the Bear Act been uploaded on the website, sir.
Please WhatsApp to me also, maybe in the group,
Yeah, I will share the link of that. Yeah, so
not link, the whole act PDF you send.
the PDF,
Chalo,
sir,
we will
because
talk offline. We will talk
yeah,
offline. It
yes,
is
sir.
100% feasible. It is easy to read. Anyway, we will talk offline.
Yes, sir.
Thank you.
Shall I take up? So, if
Students, Ridhima, students, do you have any suggestion? This is Rajkumar Adukia, Chairman, Board of Studies. Any suggestion about the whole study, the live virtual classes? Or you can write to me later. Thank you. Ridhima ji, please carry on.
thank you, sir. So, if you all have any suggestions, you feel free to connect with us, or you can write directly to sir. We'll share the details in the chat box. Secondly, what the sir was pointing on is that clubbing provisions are only attracted when the transactions are involved in such a way where tax evasion is there. But if the spouse is earning something independently out of her own skills, etc., then clubbing provisions are not getting attracted. It can be any income which they are getting, which they are earning or getting, or basically coming out of their own skills or investments. Okay. So one question is there. What happened when Mr. A give gift to spouse in advocate consideration? So if it's an advocate consideration, nothing, no clubbing provisions have been attracted. See, Preeti, the whole idea of clubbing is that you have an intent, so maybe a major or a minor intent to evade taxes by transferring the ownership without any consideration so that the other person gets taxed for particular income. But if you are transferring that asset with a proper consideration, then clubbing is not attracted. Then clubbing is not attracted. But the one thing which you have to remember is where that consideration is coming from. Ultimately, if that consideration is also sourced from the husband, then clubbing is definitely attracted. Just on papers, you're showing the transaction. To avoid clubbing provisions, that is a different thing. People do it, but do it smartly. So sir has dropped in the details. So I hope everyone can see, and if you have any concerns, please feel free to write. So Fuzzy, very good question. So income only has to be clubbed. The provisions are for clubbing, which is for the clubbing of the income. You don't club the assets. Deemed ownership provision gets applied when we talk about section 27, when there is house property. In that case, we say the owner remains the same. Only thing which you have to remember is the income gets clubbed. Now, coming on to the value of asset transferred is not clubbed in the hands of transfer or transferee. See, value is the amount which is the of the gift, which is the asset which has been given, that comes under the provision of section 56 to 10. And obviously here when we're talking about spouse or son's wife, they come under the definition of specified relative. That's why in the hands of the recipient, the particular gift is not getting taxed. And no value is clubbed back of the asset in the hands of the transferor. And also remember, Section 56 to 10, or your Section 47, which is giving the asset as gift, is also not considered as taxable transfer in the hands of transferor. So all the provisions you have to relate it accordingly. I hope, Fuzzy, your question is answered. Advocate consideration, when I talk about the assets which are other than immovable property, is basically fair market value. If we talk about assets which are immovable property in case of son's wife, it is the stamp duty value on the date of transfer. Then, any doubt in any of the clubbing provisions when we talked about in the case of spouse or son's wife? Anyone have house property given in gift in earlier year, now it's rented, then income would be clubbed. First of all, Ritika, I'm assuming this question is for son's wife, because house property given as gift in earlier year or in any year without consideration to spouse is actually where the husband or the where the transfer still remains or is deemed to be the owner. Okay. Now coming to a house property which is given to the son's wife without consideration. Obviously, the transfer can happen years back, but the rental income which they are generating year after year would be clubbed. But anything from the rental income, if invested further, and then after investing further, that any income is getting generated, that would not be clubbed. That would not be clubbed. But rental income definitely would be clubbed in the hand of father-in-law or mother-in-law. Now, suppose this house property is given as gift to son or to daughter who is major, then clubbing provisions would not be attracted. Or to anyone as a gift, clubbing provisions would not be attracted. Clear, Ritika? Lina, I'm trying. If anything is left, we can discuss. Okay. Now, further moving on. This is clear. So now we move ahead to minus clubbing provision. Section 64, subsection 1A. Subsection 1 has parts which 3, 4, 6, 7, and 8 basically are for son's wife and spouse, or spouse and son's wife. Now, 64, 1A is clubbing of minor's income. That is when you have an income of a minor child, the income. Now, the question would come which parent, father, mother, that now we'll see one by one. First of all, whatsoever minor is earning, basically, does everything get taxed or does everything get clubbed? The question is simple. exceptions are there, which will come to it, which is when the minor himself is earning something from his own manual work, skills, talent, and or if he's disabled. That part is here. But first, we'll understand the clubbing provisions here. Ruhani, I'll just answer your question after covering up this. Okay? So the provisions of clubbing when a minor is earning any income gets clubbed in the hands of the parent who has a higher income. So suppose Mr. A has an income of 6 lakhs, excluding the minor income. Mrs. A has an income of 7 lakh. So the income would be clubbed, whatever the minor is earning, in the hands of the parent who has the higher income. This is for the first year when the clubbing provisions are attracted. First year means when the first time the minor's income is getting clubbed. Once it starts getting clubbed in Mrs. A hand because of she being a person who has a higher income, this will go on for subsequent year. This will go on for subsequent year. That means even if the next year Mrs. A has lesser income than Mr. A, still the minor's income would be clubbed in Mrs. A hand. It will go on and on and on. Again, why clubbing provisions got attracted for minor? Because the income tax assumed that minor, if is having any particular income, like say interest from FD or rental income, all this is not minor is capable of earning. This is because of some or the other asset being transferred to, or to their hand. Rental income will attract clubbing provision, will attract section 27 though. This is because of some asset which was diverted to the minor's hand, and that's so that the income could be diverted. That's why clubbing provisions are getting attracted. Once again, I was saying, once an income gets clubbed in the hands of a higher income parent, it would be continued for the subsequent year also. Only AO has the right to change it. Assessing officer in any of the scrutiny of returns can say now this income would be clubbed in the hands of Mr. A. Only he has the right to do it. Once the minor income is clubbed, the person in whose hand the income is getting clubbed will get an exemption under section 1032 of 1,500 per annum per child. Maximum amount 1,500 per annum per child would be given to the parent in whose hand this income is clubbed. So the income which is getting clubbed is 1,000 rupees. 1,000 rupees would be the exemption amount. If the income is more than 1,500, 1,500 would be the exemption amount. Remember, this is an exemption which is given under section 10 clause 32 and is not for the assessees who are not opting out of 115 BAC. That means who choose to pay tax as per the concessional rates of 115 BAC. Section 10 clause 32 is not available for them. Section 10 clause 32 ka exemption is not available for them apart from other deductions and exemptions which are not available. Okay? So 1,500 per annum per child would only be given if you are paying tax as per the old scheme. That is if you have made an option to go out of 115 BAC. Next is, remember, if I'm talking about clubbing provisions and suppose now the the parents are separated and the person is living with one of the parents. In that case, higher income provisions are not attracted. In that case, the minor child's income would be clubbed in the hand of the parent who is maintaining that child. Now, this particular section comes with certain exception. Exception is that no clubbing provisions would be applicable if the minor child is suffering from any disability or is handicapped as per section 80U, then clubbing provisions would not be applicable. It would be assessed in the hands of the child itself. Second, if the minor child is earning any income from his own skills, or his own talent or his own manual work, in that case, the clubbing provisions would not be applicable. Now, suppose one of the child went to KBC. Okay, one of the child went to KBC. He won there a particular amount. he was very talented, he won there a particular amount. Now that amount would not be clubbed in the hands of the parent. Reason being that the person, that minor child has earned that income from his own skill and talent. One thing here, यहाँ पे guys, unless students, like we saw in the case of spouse or son's wife, there should be some transfer of asset for clubbing provisions. Here, यहाँ पे it's not necessary that you are the one who is transferring the asset. Minor earning any income apart from his own skill, talent, manual work would be get clubbed in the hands of parents. Will be get clubbed in the hands of parents. Suppose some other person has gifted something to the minor and that is generating income, it would be tags in the hands of parents itself. Here you will not see ki there is, ma'am, there is no transfer of asset from parents to minor income. Why are we clubbing it? No. Minor earning anything is under his name or her name is to be clubbed, is to be clubbed. You will not say it that there was no transfer from the parents. No. It is to be clubbed if it is not from the skill, talent, or manual work. If it is from the skill, talent, manual work, that particular income, which is coming from that skill, talent, manual work, or specialized knowledge, that particular income would not be clubbed. But maybe there is a twist. Now, suppose, very interestingly, I got one question in the last class. Now, suppose I was giving you an example of this child who won in KBC, let's say 1 lakh rupees. This 1 lakh is not to be clubbed because it is from the special talent and knowledge. But now, this 1 lakh, the parent, what they did, they made an FD out of this 1 lakh. They made an FD of this 1 lakh. Now, the interest on this, the interest which is being generated on this FD of 1 lakh would be clubbed in the hands of parents. Now, this is not a provision of accreted income. वहाँ पे accreted income का provision comes when you're making an asset, when you're transferring an asset and then the transferred asset is generating any income, and that is to be clubbed. But if from the generated income another further income is being generated, that is not to be clubbed. Here it is not an accretion. Accretion would have come when you have made a transfer of an asset. Here is that the income was getting generated already from a skill talent, which is not to be clubbed. But now that skill talent income got invested some in anywhere or in any particular asset, and that is generating any income, that would be clubbed. This is a very interesting point which came in the previous class. I thought of taking it an example. That definitely has to be clubbed. Minor working in TV, no clubbing provisions. It would be assessed as minor's income only because it is from Kiran. It's from his own work, his own skill. Suppose Sangeeta is asking, ma'am, suppose one of the parent does not have any income, then what will happen? Obviously, one of the parent who has an income would be considered to be a higher income person. माइनर मैरिड डॉटर के केस में इनकम वही सेम हायर पेरेंट्स वाले ग्रुप में. No, here also student section 27 is in a way covered. इन लॉ रियल पेरेंट्स नहीं, रियल मेन पेरेंट्स के हाथ में क्लबिंग प्रोविजंस आएगा पूजा. Ritika, in that particular case, clubbing would be attracted because, see, the knowledge did not generated that income. That case, clubbing would be attracted. Pooja, Agreed. You have a very valid point that she's son's wife also, married daughter hai. But son's wife wala provision comes when the father-in-law or mother-in-law is transferring any asset. But when the father-in-law or mother-in-law is not transferring any asset and minor married daughter is having any income, that has to be clubbed in the hands of father-mother. अगर ट्रांसफर ऑफ एसेट से आ रहा है फादर इन लॉ मदर इन लॉ, वहां पे क्लबिंग डेफिनेटली इंटरेक्ट होगा ऑफ सेक्शन 64 सबसेक्शन 1 क्लॉज 4 जो सन्स वाइफ वाले क्लॉज 5 6. Here also section 27 minor के केस में guys, students please listen once more. Minor के केस में section 27 also gets applicable. Deemed ownership, just like when you transfer an asset to spouse without transfer of house property to spouse without consideration or without advocate consideration, the transferor is considered as owner. Similarly, when you transfer any house property to minor child, other than minor married daughter to minor child, then also the transferor parent is considered to be the deemed owner and the provision of section 27 gets applied. So if the house property is generating any income, then it would be tax in the hands of house property which is being transferred by the parent is generated any income, it would be taxed in the hands of the transfer parent. So usme clubbing provision definitely would not be attracted. But if the house property is transferred by parent to the minor married daughter, section 27 is not attracted. Section 27 is not attracted, but section 64 gets attracted. Section 64 clause 1A, subsection 1A gets attracted and clubbing provisions would be applicable and would be in the hands of the higher parent. Okay, so can I make it in a way like when I talk about house property transferred by parent to a minor child other than married daughter, section 27 comes into picture, taxed in the hands of parent transferor. When the parent transfers any property to minor married daughter, section 27 is not attracted, but section 64 gets attracted because section 27 se to minor married daughter got free. But section 64 1A gets attracted and the rental income or the property income, which whatever that house property is getting generated, would be clubbed in the hands of parent who has higher income. Ritika, minor girl child should be clubbed in the hands of his husband. No, no, no. See, if the minor married daughter is having any income from an asset which is transferred to her as a gift, three things you have to remember. Who has given that gift? If the gift is given by father-in-law, mother-in-law, then the provisions which are there under your section 64, 1 cross 6 would be applicable. If that property or if that property is, suppose if that asset other than property is given by spouse, then section 64, subsection 1 clause 4 would be applicable, clubbing wale. If the house property is given by spouse to the minor married daughter, then again section 27 would be applicable. Now suppose your house property is transferred by the parents, then section 64 1A comes. All of this in case of minor married daughter. Minor married daughter ka koi income if Pratima is getting clubbed would be taxed in the hands of parent who has higher income, and yes, section 10 clause 32 would be exemption of 10 clause 32 would be given. So if in this case section 1032 would be given. So whenever a question of a minor married daughter comes, take a breath, see what is the asset being getting involved, because house property here, you have to be careful. If other than house property here, you have to see who has given it. If spouse has given it, then obviously clubbing provisions come in the hands of spouse. If father-in-law, mother has given it, then clubbing provisions come in the hands of father-in-law, mother-in-law, even if the house property is there. If the parents has given the house property, then clubbing provisions would be applicable as per section 64(1)(a). Okay. If it is not in house property, then clubbing provisions would be applicable in the hands of parents if it is not coming from father-in-law, mother-in-law, spouse. Got it? Any doubt under clubbing? I think one question was left. I told one of my friend I will do it. It was not a minor. Uh, Ruhani, I think you wrote that particular question. Just 1 second. If the income of spouse is being clubbed in the hands of assessee due to the spouse being not qualified for the job, and spouse generated income by buying a house property for that income, will it be clubbed as, yeah, it will be regarded as accretion, and that particular income which is generating from the remuneration will not be clubbed. If parents are transferring house property, Puja, to minor other than minor married daughter, then the provisions of section 27 comes in. Section 27, house property का, ठीक है? So the transfer of parents के हाथ में would be taxable. Okay? But if we talk about any gift in general other than property, then obviously clubbing provisions would be attracted and exception would be given. 1032 is the exemption. Ten 32 exemption comes when the provisions of section 64(1)(a) are applicable. Section 27 provisions are applicable, then 1032 does not come. Okay? Because जब तक clubbing नहीं होगा, exemption उसका नहीं आएगा. And section 27 is a deemed ownership provision. ठीक है पूजा, it's a good question. I hope this was the question. Spouse is giving house property to minor married daughter. Yes, section 27 would be applicable between the spouse and the married daughter. When section 27 is applicable, Pooja, no exemption of 1032. Students, if any of your question is left, please feel free. You would get an opportunity again to ask in the live interactive part. Reena, you have a very genuine concern. See, first of all of my friends who have a genuine concern, ki ma'am, we get confused when we write the exam. We don't know how to present it. See, one simple thing is, it is all practice. Trust me, when it comes to income tax, with every revision, with every relation, with every question, every time you revisit, your understanding increasing. Forget about you. If I talk about me, it's almost 10 years, more than 10 years. I've been studying, and almost 7, 8 years I've been teaching income tax. It's still always a learning journey. Still always some provision comes and I see, oh, this never crossed my mind earlier. So do not worry, Reena. Just focus on the process, trust the process, do it step by step. as many revisions you will do, you will feel better. Try to relate the provisions. Now, just say today we were doing clubbing, but definitely we picked up section 27. We also understood how gift and how transfer of section 47 would come into picture. Do not create hypothetical scenarios so that it just confuses the concept, but try to relate it with section by section, and definitely you will be able to do it. Again, ICAI has provided a lot of help through study notes and classes, etc. But I would request each and everyone to please make your read very strong. Make your own notes very strong, because only you know when that 2 days of exams leaves are there, how you have to prepare what is left, how you have to cover that particular part. And everyone would have a different story of revision. So do learn from everyone, but do not compare your learning journey otherwise. And do not get demotivated, okay? And see how the study material presents the answer. One second. So, Ritika, if a child is getting 20,000 from his or relative, but according to income tax, they're not relative, so it will be taxed in the hands of parents or it will be exempt. Oh, okay. So, suppose I am assuming your query says that the child, the minor child, is getting a gift which is taxable gift, which is a taxable gift, right? It is not something which is being received from relative, because if it would have been received from relative, it would not have been clubbed in. It would not have been taxed. So suppose a taxable gift is there, it would be taxed in the hands of parents. It would be taxed in the hands of parent. Simple sa hai. First of all, whenever you're applying clubbing, think that the person who is receiving that income has earned it. Okay, has earned it, and apply it as per that provisions. If it is getting taxed in the hands or in the hands of the person who is receiving, it would be taxed. It would be clubbed accordingly. So if the child has received a gift from any specified relative, it would not have been clubbed. But if a child has received from any other than specified relative, or I should say it like that, if a child has received a gift from other than from a specified relative, it would not have been taxable, right? But if a child has received a gift from other than specified relative, it would be taxable, right? Well, if it is taxable, it would be taxable in the hands of parents by clubbing provisions. Similarly, Sangeeta, your question is also the same. Usko kisi any if the child is getting any gift on occasion of any particular part, clubbing provisions would be applicable. And if it is invested, see, minor ke case mein, this is pretty much clear. Whatever income the minor is earning, whatever income the minor is earning has to be clubbed, has to be clubbed. Simple period. If it is other than those from his own skill, talent, or specialized knowledge. Okay, if that specialized knowledge has generated any gift, it would be clubbed. If it has not generated any particular income, it would not be clubbed. Simple. Now, if it is coming from accretion, if it is coming from otherwise, if it's in the name of minor, it would always be clubbed. It will always be clubbed. Sorted? Clear? Just two small provisions I'll take up, which come as a question and sometimes not. Just 1 second. Let me see if your Saransh takes up. Saransh has also not covered it. Mhm. Everyone, if it is sorted, please do illustration 7 once. So 2 provisions are left. I'll quickly take it up. Yeah. So one provision is cross transfer. Student, cross transfers is now you know that clubbing is there. If the husband will transfer any asset, particularly directly to the spouse, clubbing would be attracted, or to son's wife, clubbing would be attracted. So what they do, they don't directly transfer it. They make a transfer to other third person in such a manner so that the other third person is also doing any similar mirror transaction and they're receiving the same benefit. For example, now Mr. X has to give something to Mrs. X. He knows that if I transfer anything as a gift, clubbing would be attracted. Clubbing would be attracted. So what he does, he very smartly does not give anything to Mrs. X, but he transferred, suppose, shares in the hands of Mrs. Y, in the name of Mrs. Y. Now, similarly, a immediate mirror or of an equal amount or of a similar amount transfer happens between Mr. Y to Mrs. X. Now, if you see prima facie, the transactions would not attract clubbing provisions. Why? Because Mr. X has given a gift to Mrs. Y, which is normal, and Mr. Y has given a gift to Mrs. X, which is okay. So, clubbing should not attract it. But these transactions were planned in such a way that they would attract, if otherwise done, would have attracted clubbing provisions. They are just planned in such a way so that the clubbing provisions can be avoided. Suppose the same value is being given from one person to another. So that is a case of cross transfer. That is a case of cross transfer. And in case of cross transfer, the provisions would be applicable as if such transfer has been made by the spouse or made from the transfer to the spouse itself. That means whatever Mrs. X is getting generated would be clubbed in the hands of Mr. X, and whatever Mrs. Y, whatever income Mrs. Y is getting generated would be clubbed in the hands of Mr. Y, would be clubbed in the hands of Mr. Y. Simple. This is cross transfer. A question maybe of a theoretical part can come to you. Final thing you have to remember is HUF वाला part. HUF पे बहुत कम it comes, but simple है. Section 64(2), last part. When an asset is transferred by an individual to HUF as a gift, or basically without consideration or without advocate consideration, when an asset is transferred by an individual to HUF, that is taxed. Obviously, that is not club because HUF and individuals are member. Sorry, that is not taxed as gift because individual and HUF are members, relatives. But whatever the asset is being transferred to HUF by individual without advocate consideration, the income generated from that asset to HUF is basically clubbed in the hands of individual. Is clubbed in the hands of individual. This is one aspect. So whatever HUF is getting, whatever income is getting generated by HUF on that particular asset, which is being transferred by individual without consideration or without advocate consideration, the income of it would be clubbed in the hand of individual till the time HUF is the owner. Now, suppose partition happened. Okay. Suppose it was a property only. Let's say individual transferred the property. But till the time HUF is the final owner of the property, the income which is being generated from that particular property would be clubbed in the hands of individual. Now the partition happened. Now partition may what happens? HUF gives shares to the members. So individual got share, individual spouse got share, other co-partners also got share. Okay. Now co-partners are got the on partition got that particular property the part, no problem. So whatever the individual got back came back to it. Now suppose the property was divided in 4 equal parts. Assuming, okay, just to give you an example, 1/4 इनको मिला, 1/4 इनको मिला, and 1/4 other two co-partners got. So now clubbing would attract because clubbing provisions were when an individual has transferred the property to HUF. for inadequate consideration or for no consideration, the clubbing provisions would be retracted. Section 64(2) says. But when the partition happened, now the property is divided. Now clubbing would be retracted. Definitely not for these shares, which has been given to other co-partner, but what the individual spouse got. The individual spouse got on that particular share, whatever income is generated would still be clubbed. Would still be clubbed. This is when partition happens. This is when partition happens. Okay? It's just like giving an indirect transfer to individual spouse. They routed it through HF route. So on partition, if the individual spouse is getting any part of that particular asset from HUF, which was transferred by individual to HF without any consideration. So that partition part ka part with the spouse which is getting, uska income would be still clubbed. That's it. This is again a typical provision, comes very rare. So with this, we complete clubbing. We'll take a quick break from here and then we'll move on to understanding the provisions of set off and carry forward. That also we'll do in a quick manner, probably through a table and covering all other exceptions. And then we'll take up your questions. Okay? So let's connect after a quick 10 minutes break. Meanwhile, please have some refreshment and come back in fresh mind. Thank you. So welcome back everyone. How is everyone now? Clubbing is sorted, clubbing provisions are sorted. Any doubt on the clubbing provisions? Okay. So now we will proceed with another chapter, which is also another part of your computation of total income. See, when you're computing total income, you compute total income from various heads. Then you apply clubbing provision that if any other person income has to be included in your assessee's income. Then you apply your set of carry forward, and then the provisions of deductions come in. Many people think if first deductions come in and then set of carry forward and clubbing comes in. No, it's exactly in the sequence of your chapters, exactly how it is done. So now this is a very quick part of set of and carry forward, which we'll be covering up. Just 1 second. Just 1 minute. People, just 1 minute. Oh, okay. This is just a second. There's some hanging on. Sorry, just 1 second. Mm. Just 1 second. It's getting downloaded. So we'll pick it up from here. So naturally, when you have income under various heads, it is pretty common that income might also result in losses. That means suppose you have a loss from a particular head. Now, how will the return of income goes? How will I show whether my return of income would be negative, whether my total income can be negative? This is all the questions would be answered through the chapter of aggregation of income and set off and carry forward. Remember, it's a very basic thing. Whenever you have any losses, what do you do? Simple. Suppose you are suffering from any losses, you ask within the same house. When let's take it in a personal approach. If we suffer from any problem, we ask in the same house, in our house, if we need help. If we do not get help, then we go to the outer environment, that is the other head. Similarly, when we will suffer losses, first we will adjust it within the same head. If it is not adjusted in the same head, we go to other heads. We go to other heads to adjust it. Obviously, there are certain restrictions other in other heads. Some will adjust, some will not adjust, etc., etc. But now also in the other head, we are unable to adjust it. Then what will go? We will come back. We'll carry forward it, and from once it is carry forwarded, next year it would be adjusted in the same head. So when a loss is incurred, when it is actually incurred, that is in the year when you incur that loss, first it is adjusted within the same head, then it is adjusted with the other heads. अब other heads से भी कुछ नहीं हुआ तो वापस you come to home only. So then you carry forward that loss and then you adjust it within the same head. Particularly, just one exception is there for, but otherwise you adjust it within the same head. You don't move from head to head to adjust it. So can I conclude, when a loss is carry forwarded, it would be adjusted within the same head. This provision, this entire mechanism is called set off and carry forward. First you set off, that is the adjustment which you do in the year of incurrence of loss is setting off. Then you carry forward it, and once you carry forward it, then you set off it again. Naturally, certain losses comes with a period of carrying it out. That is lapse. It will lapse after a certain period. But remember, your total income will never be negative. It can be nil, but it will never be negative because of the losses. Obviously, in the sense, if you have certain part, it would be carry forwarded. It would be carry forwarded. वहाँ पे total income is zero आएगा, negative something amount में आएगा वो, in the sense that income for the year is zero, certain losses are carry forwarded. So first we will understand the restrictions when we talk about same head adjustment. Same head, intra-head, inter-source. People will refer it differently. Inter-source मतलब same head में अलग-अलग sources से. Intra-head is again like intra-school competition within the same head. So generally, you can adjust loss from one particular source with another source applicable in the same head. For example, house property loss can be adjusted from other house property income. Business loss can be adjusted with other business income. Capital gain loss can be adjusted with only capital gain income. But again, there are restrictions on intra-head adjustment also. Same head income ke bhi there are certain restrictions. One is when you talk about business. When you talk about business, so suppose you have a manufacturing business, you can adjust the loss of it with your, suppose, trading business allowed. But if you're having loss from any speculation business, that can be adjusted only and only with income of speculation business. So if you do not have a loss of if you do not have income of a speculation business, then that particular loss would be carry forwarded, because intra-head adjustment में restriction है, तो inter-head adjustment में obviously there would be a restriction. Okay. Similarly, if you have a loss of specified business, which in most cases you will. Why so? Because specified business with students, what happens is that most of the capital expenditure is given as deduction, and hence there definitely would be a losses in specified business. The specified business losses can be adjusted with specified business income only. Then you have a restriction on long-term capital loss. Long-term capital loss can be adjusted with only long-term capital gain. So even if you have short-term capital gain and there is long-term capital loss, you cannot adjust it. By default, that long-term capital loss would be carry forwarded if there is no long-term capital gain. Then simple loss from owning and maintaining racehorses can be set off against income from owning and maintaining racehorses only. So these are the 4 restrictions when we talk about intra-head adjustment. Intra-head adjustment. So once intra-head is done, what about interhead? What about interhead? So suppose the losses are not sufficient. I had loss from house property. I had income from another house property. Loss from house property was, one was, oh, sorry, 1 second. House property 1 and house property 2. Suppose house property 1, say there was a loss of 3 lakhs, and house property 2 had an income of only positive income of, say, 2,10,000. Obviously, 3 lakh, we say 2,10,000, 2,10,000 I can adjust. But then net loss, net result is a loss of 90,000. Now, where will this go? Where will this go? This will be adjusted with other heads. This will be adjusted with other heads. Now the restriction is What are the restrictions on other head adjustment as an inter-head adjustment? So first of all, the most common one is the loss from business. The loss from business, that is the loss from under the head PGBP, cannot be adjusted with the salaries, cannot be adjusted with the salaries. So no matter what amount of salaries you have, if you have a loss from PGBP, it cannot be adjusted. Salaries would be taxable, but PGBP loss would be carried forwarded if you do not have any other income. Ma'am, house property loss can be adjusted with salary, definitely, but salary say PGBP loss cannot be adjusted. Similarly, loss under the head capital gain cannot be set off against any other head. So one restriction is long-term capital gain. It has to be done with only long-term capital loss. But at the same time, sorry, long-term capital loss has to be adjusted only with long-term capital gain. But at the same time, short-term capital loss, we can adjust it with long-term capital gain and short-term capital gain. But now the net result is loss. You cannot adjust it with any other income. Then you have your loss from house property. Before going on house, where's the house property part? Yeah. Similarly, speculation loss and specified business loss can also not be adjusted with any other head because obviously there is an intra-head restriction to inter-head restriction, so definitely here. Then your final part, which is very important, is house property loss can be adjusted with any other income, but remember here that it can be adjusted only to the extent of 2 lakhs, only to the extent of 2 lakhs. So, for example, in the question which I did, in the example which I wrote earlier, where I had house property 1, a loss of 3 lakhs, house property 2, ka income of 2,10,000, there was 90,000 ka loss. This suppose I can adjust it with salary, I can adjust it with capital gain also, I can adjust with business income, other sources, everything. But suppose this figure would have been, instead of 3 lakh, this loss would have been, suppose 5 lakh. Now, 290 is the net loss under the head house property. So the maximum loss which I can adjust with any other income is 2 lakhs. Any other income is 2 lakh. The remaining 90,000 students would have to be carry forward. It would have to be carry forward. And this 2 lakh can also be adjusted if I have sufficient income to adjust it. If I have sufficient income to adjust it. Got it? So house property loss means there's a restriction of the amount which is 2 lakh. Now with the provision of 115 BAC, you have to remember one more thing. That if you have house property loss, the setup of it would not be allowed under any other head if you are following 115 BAC. If you are following 115 BAC, once you stop following 115 BAC, that is, you shift out from it, you can adjust the house property loss up to rupees 2 lakh. To rupees 2 lakh. Next is losses which can never be set off or carry forwarded. Loss from gambling, betting, card gains, loss from exempt sources, because if the income is exempt, naturally the losses are also exempt. The losses does not have any tax treatment. Lottery, card games not eligible for set off. Even if the business gets discontinued, still you can adjust the brought forward losses. So these are the restrictions when the year of incurrence of the loss is there. That is when you have actually incurred the loss. In that year, you will make intra-head adjustment and inter-head adjustment. Any excess loss which could not be adjusted due to restriction or insufficient income would be carried forwarded. Okay, so Kiran says, can we just loss from salary from house property income? First of all, Kiran, there would be zero to negligible chances of having a loss from salary. But yes, you can adjust house property loss with salary income, definitely. You can adjust other sources loss with salary income, definitely. But you cannot have salary losses and you cannot adjust PGBP loss with your salary income. Okay. Yes, Mohammed, absolutely correct. Preeti, if you're earning partnership firm, you're receiving salary, that salary is a part of your PGBP income. That salary is a part of your PGBP income. So definitely you can adjust the loss from that particular PGBP income. I'm talking about income which get taxed under the head salary. Preeti, speculative business is basically, if I have to tell you in general language, is intraday transactions where you apply speculation and you think that the price is high, you purchase the stock, or price will run high, you purchase the stock, and then you immediately on that date settle it off by booking profits. That is basically intraday transactions. But hedging transactions are excluded out of it, future and options are excluded out of it, commodities are excluded out of it, derivatives are excluded out of it. Otherwise, intraday transactions are speculative business and they are very much your the income from that is very much your business profit and has to be taxed. So, is my voice getting erupted because of any internet issue? Or is it okay? Can tech team please help in this? Is it right? किरण लॉस आएगा ही नहीं सैलरीज में income from activity and maintaining resources tax or another income from other sources. And absorbed depreciation also cannot be adjusted with salary. Okay, voice is getting break. Just give me 1 second. Let me just change the internet connection. Uh, uh, is it better now? Can just someone give me a heads up? Is it better? Is it still cracking? Mohammed Pooja? Perfect. Thank you. Thank you so much. Yeah. Now, once the loss is incurred in the year of incurrence, you set it off with the same head and then the other head. But still there is losses, still there are losses. Like for example, house property might have a loss to be carried forward if it's in excess of 2 lakh, the excess amount would be carried forwarded. Business loss would be adjusted if you have just salary and business income, business loss would be there. So it can be a possibility that your losses are still not fully set off. Then what will happen? They are carry forward. Once they're carry forwarded, they become the income or they become the brought forward losses for the next year. But to carry forward losses, you have to file the return within the due date in its time, except for house property loss and unabsorbed depreciation, which can be carried forwarded for without filing the return. But otherwise, you have to carry forward the losses, so you have to file the return on time. If you don't do so, the losses get lapsed. You are unable to carry forward it. Okay. So now the maximum period of carry forward and losses and manner of set off. Now, once you've incurred the loss, it is not adjusted. It would be adjusted in the next year within the same head, except unabsorbed depreciation. So within the same head, it would be adjusted. So suppose there is an unabsorbed house property loss, it would be adjusted with house property income only. And the loss which you incur would be carry forwarded for maximum 8 assessment year. So suppose I incurred a loss in previous year 22-23. Okay, I have to adjust it in the previous year 22-23. But if I'm unable to adjust it, it would be carry forwarded and it would be carry forwarded for the maximum 8 assessment year. So now previous year 23-24. So till previous year 20-30-31 only, I can carry forward this loss. If still it is not adjusted, it would lapse. It would lapse. Don't worry, I'll do the questions also. You will get a more clarity on it. So for example, let's understand it from this way. House property 1, house property 2, and house property 3. Okay. This is year 1, year 2. Now, year 1 में I got house property 1 से loss of 3 lakhs. House property 2 से loss of 2 lakhs. And house property 3 से income of say 6,50,000. Okay. I have no other income. Now, or let's make it more interesting. I have other sources income of say 50,000. Okay. Now, what would be the case? Year 1 may obviously first I will set off the loss with in the same head, which comes to 5 lakh ka loss and 6,50,000 ka income hai. So naturally within the same head, this loss is getting adjusted. There is no problem. Now suppose year 1 may the loss, this loss, let's make it bigger and make it to 8 lakhs. Now what will happen? 3 lakh and 8 lakh is 11 lakh. I have an income of 6,50,000. The maximum this 1 second here. Now the loss under the head house property is coming to 4,50,000, right? Now the maximum I can adjust is 2 lakhs, but I don't even have 2 lakhs for other income. The maximum I can adjust is 50,000 this year. So how much loss would be carry forwarded? The carry forward loss for year 1 would be 4 lakh. Correct. Now let's go to next year. Next year I have suppose a loss of 2,50,000. यहाँ पे 6 lakhs. And suppose an income of 9 lakhs. Now, what will happen? I will first adjust the current year loss. I will not adjust the loss which is carry forwarded. First, I will have to adjust the current year loss. This is the sequence which has to be followed. So now, $850 would be adjusted with 9 lakh. Still, I have 50,000. Okay, 850 got adjusted with 9 lakh. Still, I have positive 50,000 after setting this off. Now, this 4 lakh may say 50,000 would be adjusted, and now 3,50,000 would be carry forwarded. I'll not say that I have an income of 1 lakh through which I can adjust this 4 lakh, which is brought forward loss. No. I have to adjust it within the same head once it is carry forwarded. Now, had a situation, so now 3,50,000 is still a carry forward loss. Now, coming to situation of year 3. Suppose this is 2 lakh, this is 5 lakh, and due to certain circumstances, this is has reduced to 4,50,000. Okay, and this is 1 lakh. Assume now. Now, next year, obviously the brought forward loss is year 2000, year 1, say the brought forward loss is 350, definitely. But first, again, I have to adjust this. The 7 lakh is adjusted with 4.5 lakh. Still, there is a loss. Two lakh 50,000, which would be adjusted with this 1 lakh, which would be definitely be adjusted with this 1 lakh, because it's a current year loss, which I can still adjust with current year income. So this would be adjusted, and now what would be left is 1,50,000. So now the brought forward loss year 1 ka 3,50,000 and year 2 ka 1,50,000. Now next year, suppose I have an income of, see, this is now 1 lakh, this is 4 lakh, and now this is suppose 7 lakhs, and this is 1 lakh again. Now year 4 में first I adjust this loss, so there's a balance of 2 lakh, right? From this. Now 2 lakh में से सबसे पहले I'll adjust the brought forward loss of year 1. Again, there is no choice that I will adjust the brought forward loss of year 3. Why year 1? Because year 1 ka 8 year ka time is going on, which will end pretty soon. So first I'll adjust the loss of year 1. उसमें से I'll adjust 2 lakh. Now the remaining 150 and 150 respectively of year 1 and year 3 would be carry forwarded. So next carry forward loss would be 150, which is of year 1, and 150, which is of year 2. This is how the mechanism of set-off and carry forward of loss happens, specifically in case of house property or business or whatever losses which we are talking about. So in the year of incurrence, that is when the loss is incurred, you have to remember the intra-head and inter-head adjustments. Once it is carry forwarded, you have to remember the intra-head adjustment, because once it is carry forwarded, it would be adjusted within the same head only. Clear? Sorted? कहीं पे कोई doubt है in any of the years? Correct, Mohammed. Absolutely. Very good. So this is how, in a simple way, we can conclude the adjustment part of the losses once they are carry forwarded. I hope it will help you understand it. Otherwise, what you have to remember is the period only. For what period a particular loss is done, for what period a particular loss can be carried forwarded at your level. I think your Saransh, I don't know why has amalgamation and other aspect. Let me ask from ma'am, because that is definitely not a part of your particularly income. So the same thing goes for the business losses. Business losses can once be carry forwarded, would be adjusted only with business income and maximum for 8 assessment year. Speculation loss ka to in the year of incurrence also you can adjust it with only speculation income. There is no inter-head adjustment allowed, and once it is carry forwarded, then also it has to be done with speculation business only. Here the time period is only 4 assessment years. But loss from specified business can be adjusted with profit from specified business only in the year of incurrence also, and once carry forwarded. But smartly, the time is indefinite period. There is no restriction. So this is pretty much cool when we talk about 35 AD. You get capital expenditure loss. B, you can adjust that loss with only profit of specified business. And C, there is no time clock of carry forwarding going. You can adjust it in for an indefinite period, and that is why it is very attractive. Next, long-term capital loss, as we studied in the intra-head adjustment, can only be adjusted with long-term capital gain. So on carry forward also, it will only be adjusted for long-term capital gain for maximum 8 assessment year. Short-term capital loss with short-term capital gain or long-term capital gain once carry forwarded. Owning and maintaining race horses with only of income of owning and maintaining race horses. The order of setup is simply as discussed here, which is first you have to adjust the current year losses and depreciations. Then you have to adjust the brought forward loss, then unabsorbed depreciation, then unabsorbed capital expenditure on scientific research, and unabsorbed expenditure on family planning. This is how you particularly carry forward and adjust all your losses. Unabsorbed depreciation का एक interesting part है. This can be adjusted on carry forward with salaries also. Sorry, with any head also other than salary. So just like other losses which once carry forwarded are adjusted only with the same head, unabsorbed depreciation is one such particular loss which can be adjusted with any other head on carry forward other than salary definitely, and there is no restriction on the time period for which you have to carry unabsorbed depreciation. So there is unabsorbed depreciation in the current year itself. Fuzzy, by your question, I understand this. Yes, you can adjust it with any other head in the current year itself if you have sufficient income, except salaries. Salaries, business ka kuch bhi part would not be adjusted from salaries. So if I have an unabsorbed depreciation, I can adjust it with house property income, definitely in the current year itself. But actually, the breakup comes once the final part is there. Then the final breakup comes as loss from loss from the business and unabsorbed depreciation. Then it is finally variated. Does someone has any doubt? Sir, can we open the interactive session? Parna ma'am, should we open the interactive session? Students, meanwhile, please feel free to ask your queries. And if any of your queries are unanswered, please feel free to ask that. So, someone asked, can I just half complete loss with casual income? The answer is no. Casual income is strictly for your flat tax rate purpose, no benefits, nothing, no deduction benefit, nothing. If any of your question is unanswered, please feel free to ask. This is the time. And don't take burden of this chapter a lot. Just remember the timelines and just give 20 to 30 minutes of revision each to this particular chapter. Pretty easy clubbing where you can have a question from minor part specifically. You can have a question from this particular substantial interest wala part. Set of carry forward make. A question can come in a full-fledged manner or a question can come while computing tax. Please don't adjust long-term capital gain with any other type of income, only with long-term capital loss. Remember the intra-head adjustment very clearly and inter-head adjustment very clearly. Ritika, please be specific with the query. Deduction mein insurance wala part. Deductions is the chapter which we'll be picking up on Friday. We'll be quickly revising it. So we have just one class for deduction. So we'll try to cover it in a quick manner, but in a, again, all points covered manner. I'll just request everyone to please read all the deductions carefully and write your questions at one place so that they can be answered during the live class. Pratima, I think this can be helped with one of a faculty from viewers. So, Aparna ma'am, there's a question regarding where at. I believe you cannot download it. There's a link there. So clubbing provisions are applicable in both the regime, true, but exemption under Section 10 Clause 32 is not applicable when you are opting for 115 BAC. Okay, Pooja, very good question. Escaping of income is basically not allowed in any of the scheme. Rather burden must लेना इस chapter का again and again I'm saying. So if minor married daughter income is clubbed in father income, first of all, Aryan, minor married daughter income, आपको देखना पड़ेगा what type of income here we are talking about. If it's not from any particular asset which is transferred from your father-in-law, mother-in-law, spouse, otherwise minor married daughter would be clubbed in the income of the parent who has a higher income till the time she turns major. All the clubbing provisions of minor would happen till the time the person turns major. But if we're talking about the properties which have been transferred, or if we're talking about the asset which have been transferred without consideration, the clubbing provisions would go on and on till the time the property is with the recipient and the transferor. And there is a relationship between the transferor and the transferee of either of a father-in-law and son's wife or spouse and husband. See, clubbing के लिए I told you the relationship has to subsist at the time of clubbing also and at the time of transfer also. Then only you can attract clubbing provisions. Any other doubt? Very interesting questions coming up. I'm very happy to see the questions and the quality of questions which are here. So, other exemption, Ritika, which exemption you're talking about? I'm talking about 1032 only. Exemptions which are not applicable or which are not allowed under the 115 BAC are there as per the specific list, which are as per particular heads also. Absolutely correct, Muhammad. Yaqib, in fact, for any loss other than a house property and your other than unabsorbed depreciation, you can set it off while filing the late return, but you cannot carry forward it. You cannot carry forward it. Aryan, we have done this already. Income, when we were discussing clubbing, income which are generated by the skills of minor son or daughters are not clubbed. I gave an example of KBC also. That is not clubbed. But if suppose you further invest the KBC income and earn any interest, that would be clubbed. Okay? That would definitely be club because यहाँ पे accretion वाला concept नहीं आ रहा. Accretion आता है when you transfer an asset to someone and that person is generating an income from it, and from that income she's or he is generating any other income, that is accretion. So यहाँ पे वो will concept will not apply. Remember, for minor there's a general rule: all incomes of minor or in the name of minor has to be clubbed. For a minor married daughter का separate चलेगा, वो you have to see, which we discussed. But any income which the minor is getting out of his own skill, knowledge, or talent would not be clubbed. Income arising from asset transferred to son's wife would be clubbed in the hands of transferor in all previous years after that. Yes, it would be clubbed till the time of son's wife and father-in-law, mother-in-law relationship subsist. It would be clubbed. And it would be clubbed in the hands of transferor, definitely. Correct, Fuzzy. I hope all your concerns and queries are answered. Please don't keep anything unanswered. Kiran, you have a question? You want to have a speaking right? Let me ask the tech team if they can. Meanwhile, you can write the query. So does Kiran can have the speaking right, please? Or meanwhile, you can feel free to write the query, Kiran. Okay. Kiran, meanwhile, please write the query till the time we get into speaking right. There might be some issue, I guess. Okay. So students, one simple thing, do not be overwhelmed because of the syllabus. Income tax is very, very simple if the connections of the particular sections happen. Simple hai. Focus on the main points of each particular section that, okay, this point I have to consider, this point I have to remember. This is the thing that this provisions would applicable. Write the triggering points or write the alert points of each particular section that this I have to check when a question comes like this. Then only you would be able to pick it up. Okay. So just remember, prepare your self notes, be alert all the time, try to relate it. Again, relating and creating a very hypothetical case law all together, उससे confusion होता है. Simple उसको relate करो. अच्छा ऐसा है, ऐसा है, ऐसा है. This thing happens then this, and this thing happens then this. That would be easier. See, Kiran, accretion of income. See, minor having any income has to be clubbed. As simple as that. We are so I gave an example of KBC. KBC से कोई income आ रहा है, definitely would not be clubbed because it is of skills. But अब वो KBC कोई income को as a father or as a mother I'm investing and getting every interest from that, that has to be clubbed. That has to be clubbed. Simple. Mohammed, I totally get it, but sorry, I have a clear instructions to speak in English only. But I try to summarize it very quickly if you have any problem or when you say, ki, please explain it. Okay. Okay, so next class may please revise your deductions chapter. And today you can easily wrap up all the questions of this particular two chapters from everywhere. From everywhere, I mean RTP, study material, everywhere, wrap it up so that the concept stays. Quasi interest income has to be clubbed. Skill income is not to be clubbed. See, तभी I told कि general rule is when it comes to minor, किसी ने भी asset transfer किया हो, anyone has transferred it, anyone has given it, other than the relationship of being the parents, because वहाँ पे फिर house property में section 27 आता है. In general, income of minor has to be clubbed. Skills, labor, special work excluded. Otherwise, they have to be clubbed. About skill wala income, I'm not clubbing, but skill wale income, so if I'm generating any further income, that has to be clubbed. If son's wife, you mean, is well certified professional, then anything get through his parents or a father. See, Preeti, son's wife में clubbing is not coming of remuneration. Son's wife में clubbing is coming from transfer of any asset only. So if an asset is transferred to son's wife without consideration, the income of it has to be clubbed in father-in-law, mother-in-law. There is no question of remuneration which she is getting from an organization in which the father-in-law has substantial interest. वो वाला provision ही नहीं है. That provision is not there. Okay. Aparna ma'am, I've asked them to give unmuting right, but no one is responding. And I believe all the questions and queries are answered now. Shall we wrap up the class for the day, or is still there any concern? Please let us know. There was one question of Pratima. I think she was asking for the Bear Act link or how to download it. Okay, then we did. Okay. So ma'am is sharing the link for Bear Act, which you can access it from here. So meanwhile, if you do not have any concern, let's quickly just do one quick question on your set off and carry forward and see if we get it right, okay? So the question is here. Ma'am, this is on direct message. You have to share it with everyone. I think they will not be able to get it. See, question में one thing always computation of income में or any total income में question में just remember that you give a clear cut part that yes, this particular which scheme is being followed, because the entire taxability of income question changes depending upon the scheme. So please be very careful on telling which particular scheme you are following.
Yeah, students, Bridima, can I just share my screen and show them how they can reach the
Yeah,
Bear?
sure, ma'am.
Just a minute. Yeah, students, I'm just showing you that how you can, download your, it is not in downloadable form. Actually, we have linked the income tax website to provide you, and this link will, take you through this income tax act and the income tax rules, right? In this, you have to, this is this link is being given in the new scheme for the final students. Since you are at the intermediate level and there is a limited topics which are being dealt at intermediate level and there are the study guidelines. So you have to, read the Bear Act in line with your, applicability of your syllabus, in line with your syllabus only. So when you go to the study material, this is the our website. Is it visible? Ridhima, is it visible?
Yes, ma'am. Yes.
Yeah. So see, I'm just showing you how you have to go and see this link. This is our viewers website, right? Here it's a study material new scheme. You go to there, then you have to go to final paper, English medium. You go, and there are certain paper numbers are there. Under the paper 4, direct tax laws and international taxation, the income tax act and income tax rules are there. When you click on this income tax act, it will take you to the income tax website. And since you are finance Sec 3 is relevant for you, This is, see, here it's choose Income Tax Act is there as amended by the Finance Act. You are aware for the September exam, in these exams, Finance Act 23 is relevant for you. So you have to see the Income Tax Act as amended by the Finance Act 2023, right? So there are the certain sections now. You can view there are sections. The Income Tax Act is being divided chapter wise. You can see chapter wise also. First is preliminary chapter, then basis of charge and income which not form part of total income. This is section 10 actually. And then you can see this is computation of total income, chapter 4.
Ma'am, the screen is frozen.
Frozen?
Yeah, now there is nothing.
Nothing. Students, can some student also confirm? Is it visible to anybody?
Yes, ma'am, it's visible.
It's
So
visible.
now it is there. Yeah, now it's there.
Yeah. Visible, ma'am. So heads of income, as you have dealt with the heads of income, the salaries, the deductions, everything, it is section wise. See, it is section wise. You have dealt with salaries. There are 3 sections mainly. Section 15, 16, 17, and certain sections are being omitted. So you have to, see the Bear Act accordingly. Then your house property is in section 22, 23, 24. Then your 25, 25A till 22 to 27 are related to the income from house property. Then your PGBP provisions. So here, then you can go and refer the this Income Tax Act. Right, students? Anything which you would like to ask about the Bear Act?
Okay, ma'am.
Anyone has any doubt regarding Bear Act? I think Pratima, she's in there, I think. I think this is.
It's clear.
I think all okay.
Okay, you may proceed and take some question you were saying. No, you can take.
Okay. So before we quickly wrap up the class, let's have one question discussion, very simple and easy. Though we have taken a practical of it also. Just 1 second. I'll share the screen. I'll give a minute for everyone to practice and then we'll pick it up. Okay. So this is the question on the screen, which is visible. So Ma'am Ritika has a query regarding Finance Act. Okay, so everyone, please, so let's do the question which is on the screen. Daughter की marriage हो जाती है Mohammed Yaqub Sheikh. So if a daughter gets married and the daughter is not minor, so the clubbing does not come into provisions. Clubbing would only come when, again, there is any transfer of asset from the spouse or from father-in-law or mother-in-law. Then only clubbing would come, or there is any remuneration which you are getting, not because of the qualification as a daughter. So everyone on the screen, please, we are talking about a question which is for Mr. P, a resident individual who furnishes the following income to you. So you have been given income from salary, net annual income from house property, income from business, income from speculative business. There is there, long-term capital gain is there, loss or maintenance of resources is there, loss in gambling is there. Also, depreciation under income tax is 8,000 for which no treatment is given above. Other details are unabsorbed depreciation and brought forward losses pertaining to assessment year 23-24. So you have to compute the total income for this particular person. Quickly. Let's take a minute, solve it first, and then I'll pick it up. Quickly. Net annual value दिया हुआ question में please see on the house property. These are the small checkpoints which you have to remember. 18,000 annual net annual value is given. There is no information regarding your other aspect of interest. So you have to take the income from house property to be after 30%, which would be 49,000. अब इनकम फ्रॉम बिजनेस करंट ईयर का डेप्रिसिएशन का भी एस्पेक्ट उसमें नहीं लिया, सो टेक दैट आल्सो. Quickly. 1,66,800. No. There is still some difference. See, gambling laws ka you don't have to do anything. You don't even have to carry forward it. You don't have to do anything. Race horses ka check karo guys. Race horses. Okay. This is the income from business of 80,000 minus 8,000 of the depreciation. Now we'll come to the other part. Unabsorbed depreciation, which is there of how much amount? Second, how much amount is there? 9,000, right? And speculative business ka loss is there of 16,000, short-term capital loss 78. Okay. So simple. यहाँ से minus 9,000. Unabsorbed depreciation is also done. Income from speculative business is 12,000. Income from speculative business is 12,000. There's a loss of 16,000. So you will adjust it and the remaining 4,000 would be carry forwarded. Then coming to long-term capital gain of 15,800, from which you can adjust the short-term capital loss, which is of carry forwarded, because long-term capital loss, only long-term capital gain. Short-term capital loss can be adjusted with both, So 7,800 ka loss would be adjusted from the long-term capital gain of 15,800. Net result comes to 8,000. Minus 7,800, 8,000. Okay, this has to be ignored. Loss from maintenance resources would be carry forwarded. So final, what losses are being carry forwarded? So there is your 9,000 ka loss, which is being carry forwarded, and speculative loss of 4,000, which is being carry forwarded. इस side पे थोड़ा सा लिख लेना, बाकी rest is all done. Again, rest is all adjusted, simple, easy. Go step by step. It would definitely be very easy. Okay, in how much time this question should be solved? See, time se zyada, I think 4-marker question should not take more than 5 to 7 minutes with proper presentation and stuff. And I think now because of MCQ, somehow the attempting time is reduced. Obviously, the thinking time and correlating time is definitely more, but the attempting time has reduced. So in a way, it's a blessing from a person who has done all the things written, working notes, stuff. But yes, please make sure one thing, that in a hurry to do all, ऐसा ना हो कि whatever you're doing is half baked. try to put all in your questions with proper presentations, MCQ, or with proper presentations and assumptions and working notes, because that's only you will get full marks. So if you're attempting a 60-mark question, even if you have done the tax computation right and stuff right, but you have not given any working notes, you will not get 16 mark of it. Don't think and say, oh, we'll get 16 mark out of it. No, you have to give each assumptions properly. So for a 16-mark question, okay, dedicating 15-20 minutes is still not a bad thing. But again, give it your full heart. And that does not mean that attempt only 2 questions in an exam. Try to improve the speed with proper presentation. That is how you will crack it, okay? Correct. Loss of speculative business of 4,000 would be carry forwarded. Okay. So I think if you have any other doubt, we can take it up, or if you want to do any other question, we can take it up in the next class also. Meanwhile, highest is question is 15 marks, I'm sorry. So meanwhile, if there is any other doubt, please let us know, else we can wrap up the class. Thank you so much. Perfect. So see you in the next class, and please be prepared with the deductions wala chapter, okay? Thank you. Take care. Aparna,
Thank you,
anything
ma'am.
to add?